The challenge today. And a warm welcome to one and all. And for those of you who have not seen me before, my name is Langers, and I am the bobblehead that is the Scruffy trader. It's early morning, so I've got my coffee, and it's quite a bleak morning today. In fact, I switch the light off, it's pitch black, and it's just after 8 in the morning. Horrendous. Winter is here. But is winter on the charts? Well, we're about to find out. Because what I'm doing is a discipline challenge, if you haven't seen it. We're a good way into it now. And the idea is to build up a small pot. That's the general gist. Starts with 300 quid and just run it for 30 days. One trade, one golden shot. And the idea is to compound those wins into something a little bit meaningful. So that's what we're doing. So let me fire up the screen and we'll show you. It's not quite ready yet. There is a bit of a sell-off going on this morning, which is no shock, and it's kind of one of the reasons why I don't trade opens. I don't mind trading sort of after it's happened. I mean, it's currently 10 past 8. If I'm going to come into the market early morning, I like to start around after 7, but certainly be out or well entrenched by 8 o'clock. But if 8 o'clock's coming and I'm not in the market, I'll just watch it, because that's when the money flow comes in, and it can often throw the wrong direction. Why? It's just the way the markets work. They'll often go the opposite direction, soak up the stops, etc., and then go on the journey that they're intended. Now, I've worked the biases out on this morning, and it is again what this is. If you haven't seen it, it's a strength sheet that I use every day, work out the strongest and the weakest and the currency pairs, but I have another driver within it that I put an equation in, and it spits out what the bias of the day is. So I'll just be a buyer for the day on this particular market. So that's kind of what I'm looking at. I've already done that, and it's something that I share with the Scruffy squad all the time. If they use it, great, and if they don't, it gives them an insight into how to figure out their own trading. And because trading ain't that difficult, guys, not really. You know, once you've got a bias set in your mind and you've picked your market for the day, off you go. It's really that simple. Because let's be honest, the market will only go up, down, or sideways. So you've already got a 1 in 3 chance. It's kind of my take on it anyway. So what are we looking at? Well, it's not quite ready to pop yet. I'm going to let this relax a little bit. And if I'm to get into the market this side, I need 10 pips. So it really needs to be down under this. If not, I need to see it break the level, and then it's up there. So your measuring tools help you a lot as well, because you can kind of figure out whether or not your trade is safe or not. Now, at this moment in time, this one is not safe because it's too close to that level, and it could easily go up. The level could hold and then push it away. So what I'll wait for is for it to get down underneath. So it wants to be, if I draw a little dotted line on this, I need the price on the other side of that dotted line. Okay, it's just to give me a fighting chance. If not, I'll have to wait till it gets through the other level, and then wait for a setup, and then I've got plenty of room to get up there. All right, so that's the first thing that I'm looking at. So it's not far away and it is almost ready, but I need it to get further down. Now I can put a pending order here and let it pick it up and then take it back up. That's a possibility. Or I can put an order there and let it catch it and then go back up. Many things I can do. So just while I have a little think about that, I'll quickly show you the results as to what we did. Dropped a clanger yesterday. It kind of went and did what I wanted it to do, but I put the target in ever so slightly short, 9.6 instead of 10 pips. So again, pay attention to your psyche and your emotions. I mean, last week I went very well. Still a bit tired and still a bit groggy, but you've still got to earn a living sort of thing. And you make little mistakes. And sometimes you're better off just sitting on your hands, because sitting on your hands is a position. If you're out of sorts or out of whack, just take a couple of days off. Because if you don't, you'll miss something and that'll come and bite you in the arse. So at the moment, the scores on the doors are we've increased the £300 balance we started with by 58%. I put a basic target in of 700. The idea is just to grow it to a straight £1,000. We put a 25% dent in that. And it's all just compounding and moving and compounding and moving and little steps forward. And the idea of these sort of challenges, I like doing them, to be honest. Kind of resets your mind every once in a while. But what it does is it strengthens your discipline. Because once you've traded, that's it. You can't touch this account again. You know, that's it. Done. But it grows every day. And then if you get a decent amount this month, but then did the same thing next month, just by nature of compounding, you'll have a bigger pot and then a bigger pot and a bigger pot. And that's how it works, you know. Marathon, not a sprint. So what I'll do, because we're not that far away, I'll just leave the camera running. So it's a single camera shot right through, unless I have to go to the office. Because I'll be heading off down to the office at about 9 o'clock-ish. So if the camera switches off, it's just me driving off down to the office, and I'll pick it up when I get there. Okay, so I'll just let it run out. See you at the other side. That, guys, done. A little bit of a mistake at the start when I put the order in. Bloody price caught it before I moved it. But set a baseline, set a second order behind it to get extra pips based off that initial baseline of 10. It's coming target. So the idea of 10 pips is it's enough to pay you, but it's also achievable without too much stress. So even if you make mistakes, 10 pips is not that far. Okay, and it all comes down to just being careful with your trades. I guess is the easiest way. I mean, it's rocketed in a way now, and you've often heard me say, I'm not looking for the top, I'm not looking for the bottom, I'm looking for the bit in the middle. And that's what 10 pips is. Okay, so job done. Let's see what it's done to the sheet. Now, hopefully, it will have made up for yesterday. Didn't make up for yesterday because I can see it. So where are we at? So we got 2 profit lots, which was 640 plus 765, which is there, and let's move that up a little bit, and it's keeping this in the green, so very, very happy. Just to there. Yes, it's complete. Footsie taken off the 1 hour. Still tired today, and today's trade was a continuation, so I'll fill that in just a sec. Now, what's it done? Well, it's pushed all the percentages up. 63% growth. We've still got room to move this further forward. We're now at a position where the margin's catching up. We're actually at 119 today, so that makes that a bit better. But tomorrow, because we've cracked this a little bit higher, we'll be at 131. So again, you'll start seeing this is where the compounding comes in. Once you've gotten over the initial barrier, suddenly they start mounting up. Now, you get this onto £2 a point. Doesn't sound a lot, and in reality it's not, but it's £20 a day, 5 days a week. It's £100 a week for doing one trade. £100, and then you put that into a month. Well, that's 400 quid on the top of your salary at the end of the month. Or if you're looking at it across sort of 10 months, there's 4 grand on your salary, and that allows you 2 months of break, you know, because you might want to go on a family holiday or whatever, and you might be sick throughout the year. So that's a decent amount for doing very little. And I think that's where some traders fail. They look for the big money first, and they don't think about the long term. It's a long game that never ends, and it's if you do choose it as a career, it's a career that'll be with you for the rest of your life. And why? Well, as long as your hand works of sorts, because mine doesn't. I know it sounds a bit odd, but I don't. I have nerve damage in this hand. And your brain works, you'll make a living. Whereas if you're a plumber or anything like that, and your hand doesn't work, you don't work. And it's that simple. So that's one of the beauties of the screens and the charts. You know, once you've mastered it, it's a skill for life. So there we go. So we're ahead of the game. We'll be on 23 trades tomorrow. So we come into the close of this, and it's been an interesting journey, but it's getting there. And I hope you're getting some kind of inspiration from it. And I'll be very interested in your thoughts. So drop them in the comments, because I genuinely answer every single one of them. Even if it's just a smiley face to say thank you for commenting. But I genuinely answer every single one. So there we go, guys. So trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.